Welcome back, friends. Let's talk about yesterday's disaster. It was a disaster for PXT. It was more or less a blip for us. So PXT fell 30% on bad news, right? By 10:15, the market was down like 34%, but it ended up rallying back to a minus 23 by market close. What was the bad news? Well, production levels are down. Their 3-year plan has been withdrawn, and the CFO has resigned, right? And that was enough to send the market down 30%, right? But for us, we need to think about what happened to our portfolio because the day before yesterday, I'd done a portfolio update. PXT was down like 2.7%, manageable, not nothing to be concerned about. And then I woke up yesterday and PXT is down 30%. And well, that seems like it's a disaster. But we uh, we had a 0.5% stake in PXT, right? So I think that was probably a good idea, and I think that's where we sort of need to be for all the trades that are coming up. Let's say 0.5 to 1%, right? So by market close, we're down 11 cents for every $100, which means we're down 0.1%. Right? So PXT is down 30%, we're down 0.1%. Well, PXT was down 23% by market close, we're down 0.1%. And I think this is the correct thing to be doing, and it's what we're going to be doing going forward, right? This is fine. This is not a big deal, right? And the point is that we don't want any one position to make or break us because we don't care about any one of these companies, right? We just don't want to take ruin risk, right? We do not want to take a risk that could end up threatening our survival. We do not want to take existential risks, right? Yesterday I was browsing Twitter and this was in my for you, and so Pod Contrarian apparently took a he had one of his largest holdings in his portfolio is Dollar General, and Dollar General had a terrible day as well. It was down 27%. Right? I never want to be in this position. I never want to be in this position because I have been in this position. And at the end of the day, at the tail end of the day, no one has an inside track on any one company, right? We don't know what's exactly going on. The fundamental reports, they only give us so much information, and it's all backward looking. Just because a company's done well for the last 5 years doesn't mean it's going to do well for the next quarter, right? And if you take too big a position, it will backfire eventually, right? It might be that you took a position and everything went well and you made a big profit and now you're a hero. But eventually you're going to hit a point where you end up taking a big loss, like a minus 27% in a day, right? So we never want to be this guy, right? Instead, what we want to be is like a casino. We want a positive expected payoff across all of our hands, across all of our trades, and we want to do a lot of trading, right? A lot of hands. We don't want to be the gambler whose life depends on the next bet, right? We don't want to be that guy, from The Gambler, right? We don't want to be Mark Wahlberg, where everything hangs on a single bet. Because with probability one, you will lose eventually, right? This is a graphic from Nassim Taleb's book, right? So we are speculators, and what we want to make sure is that we want to ensure our survival for as long as possible, right? And the way to do that is not to take ruin risk, is not to take risks that destroy our possibility of a tomorrow. We always want to have a tomorrow, right? If there's no tomorrow, none of this matters, right? So, but then the question is well, PXC did a minus 30, minus 23. What about our model? What did our model have to say about this? Well, the risk of PXT was well represented in our model. When I took this trade, we made this graphic, I showed this graphic, and we know that in the short term, a minus 20 to a minus 30 is possible. Actually, it's possible within the first month, right? So we were well aware, right, of the risk that we were taking. It was a known risk. It wasn't a shock. So when I woke up and it was a minus 30, I didn't have a heart attack, right? No one trade should cause you to have a heart attack, right? So no heart attacks, right? So PXT is a relatively small oil and gas company. It behaves more, more like a penny stock than it does a blue chip stock. But then the question is going forward, should we be excluding companies like PXT, like companies that have like $1 billion valuation or anywhere there? Or should we be excluding anything that trades like a penny stock? Well, I don't think so. I really don't think so, because the thing is, we want this kind of risk in our portfolio, right? We want a little bit of our portfolio to have these kinds of risks, because these companies do a minus 30 just as easily as they do a plus 30, right? Yesterday could have been that the CEO and the CFO released some good news that average production levels are up and their 3-year plan is actually going so well that it's more like a year and a half plan. And then this stock would have done a plus 30. The thing is, we don't know how things, will play out. We can't see into the future. What we have is a probability distribution, right? We have an expected return and a probability distribution, and our job is to uh, make the decision of whether we want to bet on this distribution or not. Beyond that, unless you're Nancy Pelosi, no one knows anything. No one has the inside track. Actually, think about Warren Buffett. Warren Buffett can call the CEO of a company, have breakfast with him, have lunch with the board of directors, and then by market close have a deal inked to buy the whole company. We are not that, like, we are not in that position. That's why Warren Buffett is more like, that's why he is who he is, right? After 50 odd years, you have those connections. Or you could be like Nancy Pelosi. You have the news before the news hits the news wire, and everything is great, right? But we're none of those things. We have a probability distribution, and we have to bet on this distribution, and we have to size our bets correctly. We want to we want to play as many rounds as possible, and we want to make sure that no one round destroys us. And this was perfect, right? So PXT is like perfect. Like, it is a poster child of exactly how this portfolio is going to function, right? That one stock has a bad day, it does not ruin the entire portfolio. One stock has a great day, it does not blow our portfolio up either. Instead, over time, small bets just add up, right? We make pennies, and they add up to dollars, and that's what we're gonna do, at least for the time being. Thank you very much, friends. See you next time.